Financial markets are really complex, and a lot of people just simply don't understand how they work. One of the things that we'll talk about in this video is the intercorrelation and interconnection between the crypto market, and we're going to use Bitcoin as the proxy, and the stock market. You can see very much here the S&P 500 as it comes down. What is happening to Bitcoin? Well, it's just following. What about the NASDAQ? It's following the direction. What about the Dow? Absolutely. And I talk about this a lot because it's really, really important. Now, what is the difference between all of these futures? This is the S&P 500 futures, the NASDAQ futures, the Dow futures, and the Russell futures. The S&P 500 and the NASDAQ, they're really huge. You're talking trillions of dollars. The Russell 2000 is the baby, and the baby likes to cry. And it also gets happy. So, zooming into the Russell 2000, the Russell 2000 is really sensitive, and you can see how Bitcoin is following that sensitivity. I would suggest that you keep your eye on the Russell 2000. I talk a lot about this to the members of the service, and also the other charts that you need to keep your eyes on. In this video, I'm going to explain some really key points to look ahead and to understand where the market could be going, and to prepare you, because you need to be prepared. You're not going to find this information anywhere else. Let's get into it and let's run the numbers. Welcome back, everyone, to the Daily Show. I'm Ken, and I help you to be more of a financial and emotional blessing to yourself and those you love. I'm seeking to give you financial independence and also emotional mastery. That leads to your best life. Now, when we look at the S&P 500 over a lot of weeks, we're going back to literally November 2022. You can see this curving motion. We've seen some very, very volatile days inside the S&P 500, and of course, if we overlay Bitcoin, it's really similar. I want to talk to you today about the MOVE Index and also the VIX. Keeping your eyes on these measures that most people just absolutely ignore, even if they, typically people don't even know that they exist. But what is the MOVE Index? The MOVE Index is all about the bond market. What is the VIX? The VIX is all about the stock market. The VIX measures the volatility of the S&P 500. The MOVE Index measures the risk, systemic and otherwise, to the economy. It spikes when there's uncertainty about Fed policy, inflation or recession risk. We saw huge declines between March and April inside the stock market, and of course that happened inside the crypto market because Bitcoin cannot escape the gravity of the US market, and no other global market can as well. If you're inside or trading and investing stocks inside the Aussie market, the Singapore market, European markets, it doesn't matter what market it is, what happens with the US will actually feed through the world entirely. Now, what does that mean? If you're in a non-US market, you must have a look at what the US market is doing. And you can see that the VIX spiked up, the MOVE Index also spiked up, and that caused, or was pretty much a precursor of terror inside the main markets globally. If I invert the MOVE Index and the VIX Index, you get a much, much better appreciation as to direction. Now, what we've seen is the MOVE Index and the VIX, they tend to move together. Excuse the pun. And when we see VIX coming down, or VIX, inverted VIX spiking up like this, that is really, really bad news for the stock market and the crypto market. I'll just flip it around again. It's pretty conclusive. When the VIX and the MOVE spike, that means terror hitting the markets. Literally, the bond market and also the stock market, which means all markets. A lot of people talk about the US markets being overextended. Now, what are they talking about? And where does this overextension idea come from? When we look at just the normal MOVE and the normal VIX, we can see that they've come down and down and down and down and down without any real wavy action at all. This is what overextension means. This is what other financial channels are talking about. And if you read it inside the Wall Street Journal or Bloomberg, they're talking about this. This, my friends, doesn't last. Now, what does it mean if the VIX and the move start to normalize? What happens then? Let's just do that inversion so that you can see a little bit more clearly. Okay, that's a much better appreciation as to what price is doing. Now, what is this yellow line? That's the CPI. What we can see pretty clearly is that the VIX inverted and the inverted move is a very good signal for the stock market. You may be chasing a random meme coin inside the crypto market and thinking the move and the VIX have nothing to do with you whatsoever. Unfortunately, they do. When, for example, the VIX spikes up, it will cause this particular behavior inside the main markets, but you can see also Bitcoin is affected. All markets are intercorrelated and interconnected. At some stage, the inverted VIX is going to come down. The inverted move is going to come down, which means it's going to spike up, the normalized one. Typically, we see up and down behavior inside the move and the VIX, and this is just the normalized one. Now you can see at some stage we're going to see moves higher in the moves and moves higher in the VIX. That will throw negative price momentum into the global indexes and across crypto. You must be prepared for this. It just simply, the markets do not do this without retracing. Now, what happens when they retrace? As CTKS traders and investors, we're prepared and not scared. A lot of people talk about global liquidity, and that's liquidity of the central banks right across the globe, not just US liquidity. And we can see that in terms of global liquidity, we're seeing global liquidity leave the market currently. It can take time for things to play out inside the crypto market and the stock market, but the case is very clear. We have decreasing global liquidity, decreasing US liquidity, a basing VIX, which is way overextended, a basing move, which is way overextended as well. When the correction comes, it's going to come hard and fast. That doesn't mean you should panic. It means that you should pay attention. We can't be too scared to buy, too scared to hold, too scared to sell. We don't want to do chicken trading. If you've had any aha moments in this video, please leave a comment as to what it was. There were some great comments in yesterday's video. We do the cheat sheets so we understand how global markets are moving and we don't get caught off guard. Here is Bitcoin on the 15-minute, and this is just, of course, actual price action. And here is the VIX, just the normal one, not inverted. We saw that the VIX spiked up like hell, and that pushed Bitcoin all the way down. Then the VIX said, okay, it's fine, and it just plummeted again. That caused a retracement. But just bear in mind, crypto can sniff out, just like the Russell, if there's a real move or a fake move. And that is exactly and precisely why, if you're a stock market investor globally, you must follow Bitcoin. Bitcoin is like the VIX. It's a confirmation signal. Is risk coming into the market or is risk going out of the market? Is Bitcoin buying the fact that the VIX has decayed? Well, if you look at this particular spike caused Bitcoin to fall from this around 117,800 down to around 115,800. Now, if we got the commensurate kickback, because look at this has gone the other way. Maybe I can just explain it a little better by inverting the price chart. So we can see that this pull down, we haven't had a rally in Bitcoin that extends above this particular area. In fact, it should extend above all of these. Bitcoin should be back technically at least 119,400, and it is not. Now, what does this mean? It means the markets are worried. Does that mean we should run screaming from the market just like a chicken trader does? No, it doesn't mean that at all. You can do incredibly well in volatile markets, but you need to know where to buy, how long to hold, and where to sell? The answer to all of those questions is structure. So let's get into that and let's put on the structural indicator from the service. Okay, what are we seeing here? Bitcoin came down through multiple layers of structural support. It hit the 116,370 level and consolidated right there. And of course, the VIX was going the other way at that time, which gave that momentum to recover to this particular structural resistance at 117,300 approximately. Okay, so you can see that we're trying to get through this level of structural overhead resistance before we attack around the $118,000 level. A bullish case, we get above the 118 and go higher. A bearish case, we don't and we go lower. Everything depends on this 118,000. At least with the CTKS method, you know exactly what levels are important and more importantly, why they are important. And there are a ton of free resources at ctksmethod.org. It will really help you out. Just scroll down on the homepage. We turn to the alts to figure out if Bitcoin has strength or weakness. If in another way, you can say that the Bitcoin is like the S&P 500 and the NASDAQ, and the little tiny alts are like the Russell. They're super sensitive. Now, what do we see with Bitcoin Cash? Bitcoin Cash has been basing. It did a downside liquidity sweep and is pretty much back at the level. If we see Bitcoin Cash get above 574, it could be explosive to the upside. Now, a lot of people would just anticipate that the markets are going to come down. We don't do that. We have three-dimensional thinking. If price is constructive and bullish, it's bullish until it is not. And that is the power of being a trader, because you look at the market just through the lens of what is actually happening with price. It's a very, very powerful place to be. A lot of people say, I should have bought down here at this tip. Well, if you should have bought and you were seeing the markets come down like this, with the VIX and the move being so overextended to the negative side, I doubt anybody would just pop in there unless they were very, very seasoned. Now we can see on Binance Coin, we've not got over this level just around here, which is around under the 800 mark. So just think above 800 bullish, below 800 bearish. What about Ethereum Classic, which can give us an insight into ETH? We're not seeing really constructive price action just yet. We need a movement above 2160. Hopefully, what you've seen is that Bitcoin moves the entire crypto market directionally and also in terms of magnitude. And Bitcoin is moved by the VIX and the move and the stock market. It is all one big system. You cannot separate the financial instruments and just listen to one. For example, you might be in ADA, Cardano, and say, I'm just going to look at ADA's levels, I'm going to look at what ADA is doing, I'm going to ignore Bitcoin, I'm going to ignore the VIX, the move, everything else, because that gives me a headache. Headaches are much, much better than seeing your account evaporate. Or what about if you were trading and investing in Solana and you said, oh, I don't care about Bitcoin structural levels, I don't care about the VIX, I don't care about the move, I just love Solana and I'm just going to focus on Solana's chart, nothing else. Why would you do that? You're going to get burnt. You don't want to get burnt unless you're at a beach in Tahiti, kind of burnt. And even then, please apply sunscreen. So the issue is that we realistically need to know how all of these financial instruments are all playing together. And that's why we do the cheat sheet. The best way to fill out the cheat sheet and of course to understand how financial markets work is to do the profiting course. And I will be offering one very special person a partial scholarship. All you need to do is to reach out to me directly on LinkedIn. You'll see inside week 2, we go through all the cheat sheet components. You'll understand how to fill in the cheat sheet in under 10 minutes. You'll be able to predict tops and bottoms. We're talking about the VIX just recently. The VIX is very, very important. And of course, the Russell 2000, the S&P 500, Bitcoin, cryptos, you can predict the tops and bottoms of those as well. Getting into structure, how to read and understand how structure applies. There is a huge amount in this, and you basically look over my shoulder as the VIX is spiking inside the markets and I'm making fairly good money. And in week 4, it's all question and answer. So please reach out and directly contact me on LinkedIn. The link is in the description of this video if you really want to get your finances under control and learn how to decode markets. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.